What's going on, everybody? It's Stas here. Welcome back to another video. So as you guys read in the title of today's video, I just wanted to go over what ThinkOrSwim indicators do I use, how I use these particular indicators, and why everybody out there should be using these indicators to better their purchase decisions and whether or not they should buy or sell a particular stock or an ETF. But before I get into the topic of this video, guys, for all of you new viewers out there, my name is Stas, and I make videos dealing with swing trading, day trading, long-term investing, and my personal philosophies and strategies when it comes down to investing and trading in the stock market. So if that's something that you're interested in, guys, if you want to learn more about the stock market, investing, and trading, feel free to drop a like, leave a comment, and subscribe, and join the two communities, both the Discord chat and the Facebook group. Both of them are linked down below in my description, as well as the first pinned comment down below in the comment section. We're talking on a daily basis on there, guys, so make sure to get into those groups if you're interested in trading, investing, stocks, and want to be with a group of people that are networking, talking with each other, bouncing ideas off of each other, because that is what those two groups provide. So make sure to get into those groups, and let's get right into the topic of this video. So what indicators do we use? What indicators do I personally use? We're going to talk about the moving averages first, the EMA line, the SMA indicators, both the 50-day and the 180-day. Then we're going to talk about the RSI levels, and then we're going to talk about the MACD indicator. But let's talk about moving averages first. And just to give you guys a quick brief overview of what moving averages are, they're pretty much the price trend of a particular stock or an ETF over a specified time period. So we're using, in this particular indicator setup, we're using the 50-day SMA line, the 180-day SMA line, and the EMA line. So let's talk about the 180-day SMA line first. This is used to give a longer-term price trend perspective of a stock or an ETF. And all of these moving averages, guys, they can be used to determine whether or not a stock is in a bullish formation, whether or not a stock is bearish, and it can give you guys, indicators on whether a stock is at a support level, whether it's at a resistance point, and they can better just tell you where the price action, where the price trend of a particular stock is moving. So let's talk about how a 180-day SMA line is pretty much calculated, right? Because that's a very common question that I get. Pretty much the 180-day SMA line is calculated by taking the price of a stock over the past 180 days, adding all of those prices together, the sum of the prices of the past 180 days, then dividing that number by 180. Right, and this gives us a nice smoothed out line. And on this particular platform here, the yellow line is the 180-day SMA line, the green line here is the 50-day SMA line, and the blue line here is the EMA line. And pretty much, guys, these are lagging. They're lagging indicators, meaning that they don't update very quickly due to there being many data points involved in calculating these particular moving averages. So what we notice, guys, is that the 180-day SMA is the longest to update due to there being the most amount of data points. The 50-day SMA is the second quickest to upload or update because there's 50 data points compared to the 180-day data points, right? The 180 data points. And when we talk about the EMA line, we'll talk about why this is the best trend line, the best indicator to use with short-term decision making. So pretty much, guys, the 180-day SMA indicator is calculated like I just showed you, and it gives you a longer term perspective of the trend of that particular stock or ETF. Now, looking at the 50-day SMA line, this is a less lagged indicator, right? Because there's less data points, so this one updates a little bit quicker. So you could use this in shorter term trading, shorter term analysis, but this one's indicated by the previous sum of the previous 50 days of a stock and divided by 50. So like I mentioned earlier in the video, another way you can use the SMA indicators is by using them together. And this can show you whether or not a stock or an ETF is in a bullish or a bearish pattern. So we can notice that here, whenever the 50-day SMA line crosses above the 180-day SMA line, that indicates that the price of an ETF or a stock is in an uptrend pattern. And we can notice that here with this particular example. I'm looking at Gush right now. We see the 50-day SMA crossed above the 180-day SMA here, and that showed that the stock, the price of the ETF, right, is in an uptrending pattern, and we can see that clearly with these candlesticks, right? Once it crossed here, the ETF was in an uptrending pattern, and we can use that, the inverse of that, to determine whether or not the ETF or the stock is in a downtrending pattern. And we can see that here when the 50-day SMA crosses below the 180-day SMA, that indicates that the price is in a downtrending or a bearish formation, right? And we can see that here once it broke below the 180 here, the price of Gush was downtrending from 36 all the way down to 16. So now let's talk a little bit about the EMA line, also known as the exponential moving average. And that's the blue line here. And this is more used for shorter term trading, shorter term decision making, due to the data points used to calculate the EMA line being the smallest out of all of the different moving averages that we use. And the EMA line that I personally use is set at 15, so it takes the past 15 trading days, sums it together, right, and divides it by 15, and this gives us the EMA line. And this is a quicker reacting line as compared to the 180 SMA and the 50-day SMA, like I mentioned, which gives us a better understanding of the short-term price action, the short-term trend of a particular ETF or a stock. And this can also be used similarly to the SMA indicators in terms of using it as a support level, using it as a resistance level, and using it whether to indicate whether or not a stock is in a bearish or a bullish formation. And let's look a little bit closer at Gush, and just to really give an example of how you can use this EMA line. So pretty much, guys, we're looking at the 20-day 1-hour chart here. So we see that over the past couple of trading weeks, right, we saw Gush was in a downtrending pattern. And we can see that all of these indicators that we just talked about, the two SMA lines and the EMA line, they're acting as resistance points, and the trend of this stock is clearly downtrending, and we can notice that based on all of these different indicators. But what we notice here, as once that Gush found its bottom at about $28, it broke above the EMA line, and then the EMA line started to point up. And remember, the EMA line is the least lagged moving average that we use. So if this is pointing up, that is a good indication that this stock or this ETF is pushing up in price. And we noticed that the EMA line was acting as a support level with the candlesticks, the stock's price bouncing on that line. And now we notice that the EMA line is about to cross the 180-day SMA line, which is also a very bullish indication, a bullish pattern. So, that is how we can use the EMA line in the short term to pretty much give us an analysis, an indication of where the stock's price is moving. So now let's talk about the RSI level, which stands for the Relative Strength Index. And that's this indicator that we see here, right down below, right here, right? And this is used pretty much to determine and tell us, right, whether a stock or an ETF is overbought or oversold. And it uses the magnitude of the recent sells and the recent buys to pretty much determine this for us. And we can see here, guys, that the threshold that's offered by this RSI level is between 30 and 70. And whenever this line is getting closer to the 70 level, the 70 threshold, that is telling us that that stock or ETF is overbought. That means a lot of people are buying it. More people are buying it than selling it, meaning that it's causing that stock to become overbought, pushing the stock's price up, right? And whenever these lines, are getting closer to the 30 level, that means the stocks or ETF's price or the stock itself is becoming oversold, meaning more people are selling than people are buying, pushing the stock's price down. And pretty much how we can use this indicator, guys, is to give us a better understanding on whether or not a stock or an ETF is at a good potential buy or a good potential hold, right? Or a sell, right? And we can see that the stock, whenever a stock is closer to the 30 level, that may be a better opportunity to buy the stock, meaning more potential of upside if it's down here on the oversold level, right? But if the stock is at the overbought level, it may be a better, thought or idea to hold off, wait till the stock sells off a little bit to get a better deal in that particular stock or ETF, right? And now let's look at some real life examples on how you can use the RSI. And we're going to look at Gush again, ticker symbol GUSH for this example. And we could just use this huge bullish trend that we saw from mid-March up to about early May here. We can see that we didn't really see any sell-offs in the stock here pretty much between these 2 months. And if we look at the RSI level in terms of, what it was at while it was on this uptrending pattern, we can see that the RSI levels started off here at about 43, meaning that the stock was a little bit more oversold than overbought, right? So that gives us an understanding that this may be a better opportunity to hop into the stock, right? We can see that here at about 42. Then as the stock started to uptrend, as more people started to buy more and more and more, right? The RSI levels were pushing up more and more to the overbought territory, but this also was pushing the stock's price up. And then what we notice here when it peaked out at about $46.75, the RSI levels were extremely overbought. We were at 82, and the thresholds between 30 and 70, and we were even overextended in terms of the threshold, right? So completely overbought, meaning that this might not be a good opportunity to hop into the stock, right? And then what we noticed after that a little bit, as it was in the overbought territory a little bit, the stock's price dropped a ton. It went from $46.75 all the way down to $33. And that opened up a huge potential for profit, right, for this particular stock. But it also dropped the RSI levels all the way down to oversold territory at about 29. And, as this happened, right, this would give a trader, an indication that, okay, this stock just pulled back a lot. This is a very healthy thing for a stock or an ETF to do. We love to see corrections, right? The RSI level corrected itself, and this could be a better opportunity to hop into the ETF or the stock for a trade. And as that happened, right, it bounced back up here to about 53 in terms of the RSI levels, which pushed the stock up to about $40 to $41. So if you were to play that indication on the RSI, that pushed up the stock about 16%. So that's a very good way of how you can use the RSI indicator to better your purchase decisions on whether or not you should buy or sell a particular stock or an ETF. So the last indicator that I wanted to talk about today was the MACD, also known as the moving average convergence divergence. And this pretty much is calculated by taking the 26-day moving average and subtracting the 12-day moving average from that, giving us a signal line that we see right here. And this can give us an indication on whether or not a stock or an ETF is in a bearish formation or a bullish formation. And that's pretty much what this is used for, and it's used to better give us a buying perspective on whether or not it's a good time to buy or whether or not it's a good time to sell a particular stock or ETF. Now let's talk about an example with the MACD line. So we notice that this is the signal line right here, meaning that whenever we see these green bars start to pop up above the signal line, that gives us the understanding that this stock or ETF could be pushing in bullish territory. Hence why this is green, and it's also green telling you guys to buy the stock, right? But you obviously don't buy it based off of one indicator, right? And it's red here whenever the stock is in bearish territory, pushing down in price, meaning that it might not be too good of a time to buy the particular stock or the ETF, right? And we can use this and see some real life examples here using Gush, again, ticker symbol GUSH. So we see, as Gush was popping up above the EMA line here, popping up above the 50-day and the 180-day SMA indicators, how we notice the action here on the MACD is that we started to see the green bars start to form, which again means that this stock could be in a bullish territory. It could be pushing up in price. And as the stock continued to push up in price, the bars became more and more stacked up. They started to push up more and more. Then as the stock started to sell off, right, we noticed that we started to see some red candlesticks, meaning that, okay, this could be pushing down into bearish territory. And that pretty much happens every time we see a little pullback, because we do see, as it was pushing up in price here, it was started to be green here on the MACD. Then we saw a little pullback. It turned a little bit red, pushed up a little bit, the green, right? Pushed down a little bit, the red. And, we saw with the major pullback here, how big and how stacked these red bars became, right? And, that's pretty much how we can use the MACD. And to be honest with you guys, the MACD is not one of the most decisive indicators that I personally use, although I do use it in my decision making. But, just decided to throw that out there for you. I like the RSI and the moving averages more, to be honest, but I do use the MACD as a supplemental indicator, right? And that's pretty much what all the indicators are. You have to use them all together. Do not just base your purchasing decision on one indicator, because let's say if the RSI levels are showing that, for example, a stock is oversold, but it's still trending below the EMA line and all the moving averages, right? That still won't be a good opportunity to hop into the stock, in my personal opinion, right? So you have to take all these different indicators and use them together. But again, with MACD, guys, whenever the green bars are starting to pop up, that could mean that it's being in a bullish formation, right? Whenever we see the red ones, that means, it's pulling below, right? It's pulling below our little signal line here. And, that could be a bearish formation. So now to show you guys how to set up these indicators to have them on your platform. So pretty much what you want to do is go to the top right here and click Studies. Then you want to do Edit Studies. And now that I have all of my studies already set, but for those of you guys that want to set up the same studies as me, screenshot the screen here, take a picture with your phone, or pretty much just follow along with me in your platform while the video is playing. But you want to come to the search bar, to this search bar here that says studies, and type in, okay, if you want to add the moving average, the exponential moving average, you type in move average, and you would pick the exact word that's the exact group of words that are here, right? You would drag that over to the price section here, and then just to show you guys quickly, how you can edit the length or the days that the exponential moving average, calculates for. You can do your length here at 15, you can do 20, you can do 10, you can do whatever you want, but me personally, I have mine set at 15, okay, right? So that is there. Now to set up the simple moving averages, same thing with the moving average. You want to type in simple moving average, drag it over here, and then you want to make one for the 180 day, which is the length, right? 180. Then you want to make one for 50 day here. And you can also just edit that to however many days you want to make your particular simple moving averages. And now for the volume, guys, we have here the MACD, and this is very simple as well. Just type in MACD, drag it over to your volume, and you can determine the fast length, slow length, MACD length, and these are all changeable factors of that indicator. And for the lower You want to do the RSI, and you can switch these up, guys. If you want the RSI on top, you can do that. If you want this on the bottom, you can do that. Pretty much however you guys want, you can customize your particular studies. And for the RSI level, guys, all you want to do, again, with the same as the other ones, come here, type in RSI, drag it over to your lower, and you can pretty much pick whatever thresholds you want. You could do length at 14, overbought level at 70, and oversold at 30. So that's pretty much how you set up all of these different indicators. Again, you go to studies, then you click edit studies, then you're able to do all of that here. So if you guys enjoyed the video, feel free to drop a like, leave a comment, and subscribe. Follow me on Facebook, follow me on Instagram, follow me on Twitter, and join the Discord group. All the links are down below in the description. I hope you guys found some value in this video. Let's make some money today, guys. Peace.